That's what I was doing last night. This is the 5 reasons for every trade. When you're trying to work them out, and I was showing folks last night, the Swissy at the moment is an A grade, an A plus trade. And in fact, before we get started, let's have a look at that one and you can talk me through it, you guys, experienced ones. Oh, the dollar Swissy. Why is the dollar Swissy? How many reasons can you find? That's a test for current members as much as anybody else. I can find, I think, 8 reasons to take this trade, which is why it is an AA grade. And I've split the entry here into 2 because it may just come down and touch the 55 and bounce off. This is the main area in here. And I have the stop from the first one here at 50 pips and the second one, the stronger one. And this would be the one, if there's a big news event later in the week and price hangs around up here, I might even leave this one running. But that one there. So why? Name me some reasons. Shout out for me in the chat box. At least one reason each from you. Come on this morning. I need you all to take part. There's only me, Billy No Mates. What can you see on there as reasons to take the trade? Give me a reason. Why is that an A grade reason for a trade? Either type me out all of them if you want to be clever, and you're really clever. And if not, just give me one reason. Well, Dan says it's pulling back, so that's a reason. And then Mariano says a bounce off an EMA and a trend line, yeah. And I count each individual EMA as a reason. So you've got the daily 55, you've got the weekly 55, and the daily 200. So that's 3 reasons. You have the trend line and the pullback to the trend line. So we're clearly in an uptrend, and that is an area of confluence. Trend line 55, 255 says Etienne. Support of fib levels. You've also got the fib level. Well done, well spotted. I hadn't put the fib on. So if we fib the most recent move from the recent low to the recent high, we now have somewhere to tuck our stop behind. So 61.8 is 50% is where I start to pay attention to fibs. I don't bother with the smaller numbers. 78.6 fib for me is the final line in the sand. If this breaks, I start to think we've changed trend. But for me now, so I'm counting on my fingers again. Now you can't see this. I have the stop below the whole number is 1 reason. Whole numbers count, so 8,800. I have the stop below the 200 EMA, that's 2. I have the stop below the 78.6 fib is 3. I have the stop below the horizontal weekly 55 EMA is 4. And then below the trend line is 5, and below the 55 EMA is 6. I have previous major support and resistance going on there is 7. And the final part of the puzzle is I then have a very good potential risk reward. I'm risking 50 for a potential, that should be down here, 228. Risking 50 on average for 200 pip gain. So that's a 1-to-4 risk reward ratio. Well done, Zoe. And down says, right, so everybody had a go. That's woken you all up. Now, I really ought to do more of a Q&A session today if you're all actually taking part for a change. But it's the time of year when I'm starting to look at what am I going to do for the year ahead? What am I going to invest in? Where do I think the most amount of money potentially is going to be? Because bear in mind, I don't just trade Forex, I work in all markets. And one of the big areas I think again this year is going to be crypto. And I think, not financial advice as ever, and this is just my opinion, I think if we can catch some of the smaller projects at the right time, those are the ones that can give you potentially life-changing gains. So that is one of the biggest areas I am going to be focusing on. So I'm going to have a quick run through what we did last year. This is the crypto course inside Mentor Pro. This is from the 2020 video that I did originally explaining why I thought that crypto would be the best investment in your life. And so what I was talking about last year, so December, so the start of this year, this is what I was looking at today. This is the trades I was looking for. Sorry, everything crashed about 10 minutes before this session started. And I panicked to try and get all this lot back into some semblance of order. So July 2022, I explained I was buying gold and silver. And once again, I talk all the time about catching the right cycle at the right time. Since that time, gold and silver have gone up 50, 60%. In fact, gold is up 35 this year and silver this year, 2024, and silver up 45%. And then in March 22 as well, and these are all things I've shared with you all the way through, I was explaining about FX, crypto, stocks, and gold. So that was important for them. And then last year, or previous year now, to get used to this, in April 2023, I explained I started to pay attention to crypto again. And then by the July, I was actively buying again. The crypto I bought in July 2023 is up over 200%. And again, I shared the main ones with you on here. This was a post I did on January the 3rd of last year. And I was talking then about what I'd done the previous year. Even though I'd been very defensive, I thought there was going to be a crash in 2023. It didn't happen. I still managed to return plus 30% on stocks and ETFs and 86% on my crypto at that point, as well as, and gold and silver I'd made 10% on. The big gain on gold and silver was in 2024. I've just explained. Talked about the hedge funds. The traditional mantra is just put money in the S&P and you can retire with $1 million when you're 70. Well, guess what? For some of you, by the time you retire at 70, it won't buy you a cup of tea. I'm not a big fan of that theory. And I was just talking with a financial advisor this morning, a gentleman who works with high net worth individuals. And on an average year for them, for a conservative investor, they're talking around 5%. It's a net of fees, which it clearly doesn't even cover you for the cost and price of inflation. And then I was talking about the Bitcoin halving was due. I think that was in April, and explained what had happened in the past and how that was likely to impact this year, just gone. And then I was talking about the global outlook, etc., etc. So in here, if you want to scroll back through, you can go through to the on the transcript if you wish. At 12 minutes into this video, I explained why I had been buying uranium the previous year and why I was still continuing to invest in uranium and mining stocks. So here I was looking to buy back into uranium. That did well for the first half of last year. And then at the 28th minute, I talked about Bitcoin miners, and the halving this year, as I say, was April, I think it was. And the halving, what is Bitcoin halving? Somebody tell me while I have a sip of my tea, what was the Bitcoin halving event? What does it mean? And what are the implications of it? Miners, halving. I think it means they pay out half when you mine a Bitcoin. So what it means, Ewan, well done for having a go, that a Bitcoin miner, let's say, was allowed to mine 100 Bitcoin at a time. Suddenly, the way that the protocol changed, the same amount of work and effort would only yield 50. So their potential profit is halved unless the price of Bitcoin continues to rise. So what I was explaining is, but by the time the halving came up, and in an update, I explained why I took profit on Riot. And if you remember Riot, as I come to the charts a little later on, you will understand why I did it and the significance of it. And then I was talking here then about the halving. And the halving has happened every 4 years. And each time after the halving, there has been a familiar pattern. And that pattern appears to be playing out again now. And that pattern also suggests that the smaller tokens should be the stars of 2025. So that is the area I am focusing. I was talking about, this was prior to the Bitcoin ETF and the implications for the miners. When the halving event happens, because unless the price continues to shoot up, their margins are going to get squeezed. So, and a lot of them are unprofitable anyway. So again, you can go back and have a look through all of this, what I was explaining and why. And then the 33 minutes, I think I started to talk about Forex. And Forex this year is going to be, everything is going to be very interesting, because when Trump gets back in, if he starts on Truth Social and X like he did last time, there's going to be so many things said left field that could cause volatility. But then again, volatility is what we do need to try to be making profits. Silver, I was talking again about buying into silver again at 35th minute. And silver at the time, I think, was around $22 and it went up to 30. I was talking about to buy gold at 1940, and then the silver itself is drifting at the minute. So 23.30, I would definitely be a buyer again at 22.30 and absolutely at 21. And then Ethereum, if I wasn't in it already, 2000 is a big area. I don't think we got back down there. I personally will buy more if we get anywhere back down here again around 1700. XRP, this is the, wasn't it? Should I put some? Oh, the Musclemen. I bought the transcript was wrong here. I was explaining I was buying XRP, the token, at 52 cents. I've explained all last year when I was doing this that at 50 cents, XRP was a risk because they were being sued by the SEC. But I was following the court case, and the court case, the more you read about it, looked they were going to succeed or certainly only have to pay a small fine. And therefore, I was willing to take the risk. So again, when we come to the charts in a minute, then you will see I was suggesting and recommending, well, not recommending because it's not financial advice, but I was explaining to you that in the January, I was buying XRP at 52 cents. And then I was talking about Germany being in a recession. And what else have I got on here? Ethereum, I think, was at 36 minutes. I think Ethereum's just gone, and then 37 minutes was the S&P, and 44 I talked about. I'd sold a lot of the uranium at that point as well as. So all of these are in my blog. You can go back through them again. And again, November of last year, once again, this was a press release that was written, so it's a bit more hypey than anything that we normally put out. But it was explaining about how I'd done the original webinar in 2020, and it was explaining basically what a clever chap I am. Weekly analysis. So February the 11th, I explained the big gains that we'd been making on crypto again. So once again, the recurring theme throughout the year, I was explaining many, many times why I was going to focus in 2024 on Bitcoin. And I explained on the 12th of February why I thought Bitcoin could hit 100,000 in 2024. And I said, if you missed out on the boom, then you're in luck. It's not often you get a second chance. And since that time, Bitcoin is up 100%, and other parts of my portfolio are up 200%. And some of the crypto I bought during the year, one of which in November I bought, went up 500% in 3 weeks. So again, you can understand why I am spending so much time and effort in here. This was a quote from Paul Tudor Jones, billionaire in 2020. He said, buying Bitcoin, is it like investing in Steve Jobs or Apple or Google in the early days? And I mentioned before, Amazon, all the big news sheets that are trying to sell you stuff, say to you, oh, if you just followed our advice and bought Apple in 1997, you would now be a multi-millionaire. Well, Apple dropped 95% in, I think it was 2003. So very few people who bought in 1997 rode out that one. This was showing you a clip from the video originally. So this is another thing I need you to remember. So in a little while, I'll show you up to date our original crypto portfolio. So this in January of last year Bitcoin was at 47,000 when I made this video. So when I said in the video, I thought it could go to 100K, and I explained why, and I got that right. Those of you that joined me in the May of 2020, the beta testers and the bigger investors, we were buying Bitcoin at 8,130. And as of January of last year, that would be up 480% if you just held on to it. Those who joined in October, the big presentation would be up 250%. Ethereum, we bought at 188, was up 1,200%, etc. Don't go blindly following this because we sold many of these. We got rid of Fun, Zcash, Dash, etc. Cardano was one of the best. We bought it at 5 cents. At this point, it was up 1,000%. But again, a lot of these we have since replaced. But that, again, if you want to understand about crypto and you want to understand why I'm so passionate about it, all of this is a history lesson now, but these are things I shared with you in real time, explaining the thinking for all of it. And there is the transcript under here, and there's transcript from all of the videos you can find by clicking on here. Then again, in February, why I am a Bitcoin crypto bull, you got the picture. Big crypto wins in the portfolio, Bitcoin to 40K. So in March, the doomsayers were saying that the experts were Bitcoin was going to pull back to 40K. I didn't think so. I think it was at 60 at the time, and I explained my reason. I also explained how the big boys try to scare you into selling your positions. And then here in April, I talked, if you really want to succeed, this is what I do on a daily basis. And I cover this lots of times in these sessions as well. So excuse me, once again, if you want to go through stuff, you go back to my blog and you can click on here and here. And you can go back and you can read all of these articles and the videos as well as. And I think with the video, it's really important because you understand my thinking and emotion at the time. Everybody after the event can be so clever and so smart and say, hey, I did this, and you don't know if they've lied or manipulated things. This is cold proof here of what I said and what I felt at the time. Then for you guys, I shared with you part of the portfolio that I have with my private investing group. And so I explained I would be buying Bitcoin, Ethereum, and Solana if I was starting again now in the July. And in July, Bitcoin was at, I would be interested to buy around 60K, I said, if I wasn't in it already. And today, Bitcoin is at 101,000, and that is since, what was it, April? So in 8 months. And I said if it dropped further, I would buy more. And then I was looking to scale back in again. Ethereum, I said 3,100. Ethereum's not really gone anywhere this year. It's only up about 10%, 15% from that position there. I did actually at one point last year sell all of my Ethereum, all the new Ethereum, and put it into Bitcoin, which turned out to be a good decision as well. And I was saying if it pulled back to 2,800, and then Solana, I've moved this now into the top division, and I've explained I bought some the other month at 150, and I also bought some the week before at 130. Solana today I think is at 240. So the journey throughout the year was crypto. And then on top of that, I also shared with you, this is one of my members of my investing group, Lucy, never made any money on stocks before. And she made, it's a bit small, is that? Let's have a look on here. And she made 1,000% on, here she go. Excuse me. This was part of her investment, but part of it she sold at 200. She bought $204 worth, 4 shares on the 26th of January for $48.85, and she sold it on the 21st of November, so 11 months for $537. She made 1,000% profit. So once again, being in the right sector at the right time, this is allied to Bitcoin once again. Now, where was I up to? I also explained about how to build a portfolio and how to do it. And then in here, where do we get up to next? This was Lucy. This was a focus on crypto. So in November, I sold most of my stocks. I sold my mining stocks, gold mining stocks, because that was another big thing I was into last year. My best mining stock was up 265%. I sold it, and I explained why I was focusing on crypto for the rest of the year. The crypto went up 70% in the next 6 weeks. So once again, it is all about trying to catch the right cycle at the right time. And this is talking about what we did and some of the profits that we were in last time, etc., etc. So for the year ahead, Barron's suggest that Bitcoin could double again. And I tend to think they might be right. And so I am willing to put my head on the block again. This is, as ever, not financial advice. It could just as easily tank. And I think it will be a wild ride with Trump especially. But now that all the big boys are in and the ETFs and the big money and high net worths can now invest via family offices, etc., I suspect that Bitcoin, my original thinking was maybe 150, 160 grand. But okay, let's go for it again. I think, yes, we could get up to 200,000 this year. So that is my thinking with crypto. This is the other website. Some of you were in here this morning are members in this site. Oh, crikey, there's quite a lot of you sneaked in late. Morning, Cameron, Danny, Ewan, Farah. Hi, Farah. Karim, Lim, Madhu. Morning. Hi, Madhu. You got in. You got the ticket. And who else got? Mustafa, Robert, SD, Sonny. Hi, Sonny. You got the message. Wasim, morning to you. So this is my other website. This is where I share my stock portfolio, my trading portfolio. And I also have a Telegram group here as well when I send out buys and sells and explaining what I'm doing in real time. This was in that group in January. I explained a hot tip. I explained a stock that I was buying and also my crypto plan. And the crypto plan was as follows. We have tier 1. If you think of soccer, football, of different leagues. So you've got the top league, the second league, the third league, and the fourth league. The first division for crypto is Ethereum, Bitcoin, and XRP sneak back in there now, and Solana for me. And I was explaining in there, I don't expect this particular group to go up 10x or 20x, but those are the solid projects that I think could go up maybe 5x over the next few years. And some of those are already up double this year alone. The mid caps, this is the group that I feel have the potential to go to maybe 10x, and then the smaller ones to 10 to 50%. So this is the crazy group. This is the group I think is going to kick off now, and we've already seen some of this already. And then I was also explaining about stocks, and then some of the wacky and wonderful new projects and airdrops that could be coming. So here, this is where I was explaining to folks what we were going to do inside that group, and then also how to build a portfolio. And I did actually share something like this with you guys in Forex Mentor Pro as well as. So what I've been doing with crypto is making profits on the smaller stuff, and then taking those profits and put some, well, A, take the stake out, and B, putting the balance into Bitcoin. So I have bought, in inverted commas, Bitcoin this year at 90,000, which, considering I started at 8, is scary. But in real terms, in my mind, the 90,000 purchases were paid for by profits from rotating out of the smaller ones. And then I showed you stuff like this at the back end of the year. This is the previous rallies that have gone on after the halvings. So the first halving was 2012, I believe. And then from 2012, we had a big surge from 8,447% in a year. The second one was up 290%. This is just Bitcoin, 290%. The third one in 2020 was up 559%. And at the moment, we're now up around here, and we have been up at 108. This has not gone off as massively as normal, but that is what we're thinking. And I showed this with you before as well. So what tends to happen is phase one, most of the money, profit taking, goes out of Bitcoin. That's not to say most of the money, but particularly retail traders traditionally have taken the profit from Bitcoin and then rotated it into Ethereum. And Ethereum does potentially look more interesting than Bitcoin at the moment in terms of potential shorter term gains. Then it tends to rotate into the larger caps. So folks take the profit from Ethereum, they go into the next group down. And then the fourth one is the alt season, the crazy ones, the smaller ones. This year, well, 2024, it went the other way around in a way. The alt season started early, but that's what we're looking for again for 2024. This is the other website, it's yourinvestingfuture.com. We did do a 10% discount promo for Black Friday, but if you're a member of Forex Mentor Pro, you can still get the 10% off. If you go into the crypto course, and again, this is all explaining about cryptos, there's a full course in here for you. You go down to the bottom and click Get Started, and you then go to Join Now. You should find that there is the discount there. If you want to pay in crypto or any other way, email me and let me know. So, Sunday, I said this was what I was looking at for this week. And I was explaining that this time of year, generally, this was the week when many traders get back to us, to the markets, but things don't really get going, usually, traditionally, until after Martin Luther King Day, which is the 20th this year. And obviously, there is another big event on the 20th. It is Trump's inauguration. And that, therefore, the day after could be a very wild ride. Could be a very wild ride on everything, because we don't know how much of that is going to, the things that he's promised, he's going to follow through with. But that's what we're thinking. So anyway, I said this week there was a few trades I was looking for. A lot of them were bigger areas. There's that USD Swissy I've just shown you. I also explained you could consider a counter trend short at the top, but it's not for me. And then I was talking about, from an A-grade perspective, Aussie yen. I think I'm still clinging on in there at the minute. And also the euro pound. I took the euro pound yesterday, 83.10. But this week or next week, I'm not expecting massive amounts. The big event will really come traditionally after Trump arrives. Then, in terms of stocks and things for the year ahead, I am looking at uranium again. I'm watching it closely at the moment. The demand for uranium is increasing because the world is trying to go green and cheaper and cleaner fuel. And nuclear is the cheapest and the greenest. And Goldman Sachs now are going for it, which is a little bit worrying for me because I like to be contrarian and not in with the mainstream. But I will be looking to buy some uranium stocks again this year and or ETFs. To be honest, I didn't have time to research enough for a prediction for the year ahead for stocks. I'm going to do that in the next few days for my investing group, and then I'll share some of those ideas with you guys in the weeks ahead. Other areas of interest, clear. Well, let's actually go back to here in Goldman's. So they're looking at different sectors. So it's worth having a read what they think is going to happen. They spend a lot of money on research, etc. Having said that, there was a note went out last year. I think they were anticipating for high net worths, it might be 10% gain. As it is, most companies have done well this year, made maybe 20%. But these are the sectors that they are saying at the moment, overweighting for these. So that's what they're thinking of. Real estate, I'd be very careful with real estate personally. This was an article in the Financial Times, I think this was today, talking about Indian investors rushing to highly valued defense stocks. So again, Trump coming in, all the wars around the world, technology, drones. I think it was Elon Musk the other week had said something to the effect of, why are we spending $50 million per F-35 jet when nowadays, when you look at what's going on in Ukraine, it could be fought with hundreds or thousands of drones. This is Goldman Sachs S&P forecast. I think they're suggesting 10% growth in 2025. Bank of America, again, I was having a read of this morning. And then what could go wrong? Well, one of the things that could go wrong is inflation. If Trump follows through with tariffs, then that could well re-kickstart inflation, which will not be good for the US economy and will also have an impact on the dollar. So we'll have a look at that in a moment. And then CNBC, another thing. I mean, the financial credit card debt in America of individuals now is at $1.17 trillion, which is scary. And many people have maxed out to the limit. US corporate bankruptcies hit a 14-year high last year as interest rates take toll. And one of them, this is the kind of worrying sign as well. This is Party City. So this is a store that's supplying a retail store for parties. Well, if people are maxed out on their credit cards and haven't got the cash, then they're obviously going to pull back on things like that. So again, we want to be thinking carefully about what sectors to get involved in. Forecast for investments in 2025. So once again, I will read all of this lot for you. I will come up with my own theories as well anyway. I still have gold. I have 25% of my assets tied up in gold, physical gold that is bought through bullion vault in London and stored in Switzerland. Now, the thing is with gold and metals, normally you don't make much money. And if you, at the moment, don't have that much money, then gold really is, to me, is the final part of the puzzle. Because generally, it doesn't make a lot. Generally, and every time, you have to pay for storage and insurance as well as paying capital gains tax on it. So it's not the best investment in the world. But the gold mining stocks were where we made the money last year, the big money. And those are the things that I would be paying more attention to. But to do that, you still need to keep your eye on gold and silver. So I'm going to go through some charts now. I'm going to show you some of the things I'm looking at in the different markets. I'll show you about gold and silver and one or two of my miners. I'll show you some crypto as well to give you some ideas on where to focus and what to do. And all of this is done using my M2 strategy. And the only difference is when it comes to Forex, I am 70% technical and then I filter my trades with fundamental. And so fundamentally, for example, at the moment, my bias is I only want to sell the pound. The new government in the UK is unbelievably bad. The last lot were bad. This lot are insanely bad. They have no business commercial experience, any of them. They brought in a load of tax rises that are hammering the economy, and I do not see the potential for any growth in the UK, and it's just going to get worse and worse. It's literally run by idiots at the moment. So my thinking for the pound this year, from currency point of view, I only want to sell the pound, and nor do I want to buy UK stocks either. Borrowing costs are highest hit level since 1988. There's no money. People are laying people off because of the tax rises. The tax rises to smoke and mirrors. Instead of taxing people individually, they've increased the tax that companies pay to employ people. So guess what? In a downturn of economy, the big companies are having to lay people off, which will put unemployment up, which will mean that more money will be spent from the government to pay for people to sit at home on their bums. So UK, no way. And then the EU. The EU is equally run by a bunch of idiots, and they are becoming more and more draconian in what they are trying to restrict people on what we can do and what we can't do. And they're trying to put restrictions on big companies. Macron today is slagging Twitter off. The German left wing are slagging Twitter off. If they could, between them, manage to ban Twitter, they and Starmer in the UK as well, they're all doing as much as possible to do it. But it is a draconian society. When you look at the energy in the business community in the USA and Trump, everything is USA, USA. This is going to be great, positivity. And at this side of the Atlantic, it is all negativity. So for me, I am looking to sell the pound. I am looking to sell the euro. Australian economy last week, 2 weeks ago, explained that their tax revenue is down. They are a big trader with China. Chinese economy is slowing down, is bad for Australia. I only want to sell the Australian dollar. Equally, the Kiwi, the New Zealand dollar, I only want to sell the New Zealand dollar. So the bias is both technical and fundamental. I want to continue to buy the US dollar. So what I do every day, I have a look at the dollar index, as I've shown you many, many times before. The dollar index has clearly been going up since September, up, pullback, up, pullback, up, pullback. Could be a bigger pullback this time, anywhere around 107. I would be interested to use that would tie up with the dollar Swissy that I've just shown you. The Nasdaq is again trying to retest all-time highs, and I suspect it will break all-time highs when Trump gets in. Similarly for the S&P, even if it's just a euphoric rise in the short term, I still anticipate that will happen. However, there is a concern with the S&P that 37% of the S&P growth last year was tied up in the FANG stocks, particularly Nvidia. If one of those was to crash or to pull back significantly, that will dramatically impact the S&P. So I have started now to watch the Russell. This is smaller companies in America, and they at the minute have grown steadily, nothing spectacular compared to the S&P. It would be a lot healthier for the American economy if these smaller companies started to do well. And what happened yesterday? Price stopped and rejected at the 55 EMA. And looking to the left, it stopped at a major area of previous support and resistance. So it was predictable. If this was to break higher, and I need to set an alarm now, then that would be encouraging. You can trade the Russell itself, or could start to look at smaller US stocks. Now, the only thing is, remember, I only buy a stock if I think it can make at least 25% in the short term. I only buy a crypto if I think it can make 35% in a short term, and I mean within a few months. So for me personally, this is not of interest, but it is of interest just as a barometer to see what the US economy is doing. Now, remember, Goldman Sachs was saying one of the potential issues for the year ahead in the US is inflation. And one of the things that could make things worse for the US is if they have to start paying more for people to buy their bonds, to buy their debt. And at the moment, the 55 EMA yesterday has held down the 2-year note. At the moment, the US government, to try attract investors, are paying 4.2% interest. If they start having to pay 5%, which is where they were back in the spring last year, the more this goes up, that means the more interest that the US government has to pay out to service that debt that comes out of the tax revenue, which is bad for the debt mountain, which is currently at 36 trillion. The 10-year note is even worse for the US at the moment. It's now back up at 4.6, and it was at 4.99 in October of 23. So once again, this is bad for the US. The thing about this as well is that other countries who have borrowed money or borrowed money in the dollar will need to convert more dollars to be able to pay off their debt, which means that the dollar is more likely to go up. Having said that, Trump doesn't want a strong dollar, and we need to see where the impact is going to be for tariffs. So all of this, I'm just watching this all the time. Gold has consolidated over the holiday period. It's gone absolutely nowhere, but it gives us a level of confidence that clearly price has consolidated at 2.5 grand. Silver was the better performer for us last year. We bought silver, and I was saying to folks in January that silver was one of my trades for last year. That was up 48%. Gold was up, I think, 35%. Bitcoin, remember I'd said I would be a buyer at, was it 48 earlier in the year last year? And then with my group, investing group, I'd said to them I would be buying again at 53,000. And look what it is, guys. It's basic support and resistance on a 55 EMA in a clear uptrend in an asset class that I believe, because of the blockchain technology and what's going on around the world, that I believed that this has legs. And that was up 100% from September through to December. And this, again, is why I'm involved. Now, Ethereum, I was saying it was at 3,100 in January of last year. So it's only up at the moment 70%. Only. And it was up 87%. Having said that, this is one I shared with my group, and I put this out on Twitter the other week. Think about the implications of Trump. Trump comes in, and now he's done a 180-degree turn in terms of crypto. He previously was against crypto. He received, as well as the Democrats, received a lot of money in donations in crypto. On top of which, Trump and his family have got NFTs, they've got, I think, their own tokens. They are making a lot of money out of crypto. And also, Trump's attitude has changed now. There is a school of thought that suggests that they would actually create a treasury for Bitcoin, which means that they will accumulate lots and lots of Bitcoin. If that then drove up the price of Bitcoin, one of the research papers I read suggested that if they were then to gain interest on their Bitcoin, they could use that to pay the Medicare bill. Another suggestion was that if they can get Bitcoin up to 1 million or 2, they would be able to pay off a huge chunk of the dollar debt, which is an interesting concept. But this is Hedera. This is, if you go onto YouTube and you look at Mike Maloney's History of Money, one of the projects he spoke about in there was this one, which is HBAR, Hedera. I was not involved in this originally. I missed it. I mean, I've done really well out of crypto, but this was not one of my crypto. However, when Trump got elected, then suddenly there are various projects that are likely to do well under Trump. So on the 14th of November, to members of my investing group, I sent out a telegram explaining I was buying at 6.5 cents. And 6.5 cents in here, that went up 500% in 3 weeks. 500%, guys. 500%. Just put money in the S&P and hand it over to a financial advisor and we'll make you 5% a year and you'll have 1 million when you're 70. BS. So this kind of thing is the thing I am looking to make substantial profits of. Again, I said to folks, when it hit 300%, I mean, this again is so crazy. It hit 300% is take out the initial stake. Do not sit and hold this all the way. So 300%, I took out the stake and I took some profit. At 500%, I sold half of the rest of it. So now I've made a substantial profit. I now have cash to put into another project or to buy Bitcoin with. And then I go looking to buy more. And I was then looking to buy more at 25 3 weeks ago. And today it's up 31. And remember, I only buy a crypto project if I think it can make at least 35% within a few months. Solana, if you remember back to the post I showed you earlier, from earlier in the year, I was buying Solana at 150, 140, 130. So Solana, from that point there, was up 120%. So I actually believe in this project and I'm happy to stay in longer. So I didn't take any profit out. I just took most of my initial stake out. I then bought some more. XLM is another one. Now this is one from the original group, and I'll show you that in a moment. This, I made good profit, substantial profit out of this last time. This is what it did last time. Went up, pull back, went up, pull back, went up, pull back. So you buy, sell, buy, sell, buy, sell, or take profit, etc. So then when the price collapsed in 2021, what I had left of this was bought and paid for. And so I just sat and left it, because if I put money in the bank and make 3 or 4% and get taxed on that, what's the point? Suddenly, Trump comes along. This token now could benefit from Trump dramatically. That shot up 350%. I've sold half of it. And now I've bought again the other day at 35. XRP, remember, I showed you the post from early last year. I explained I was buying XRP at 50. I also was buying at 45. So I was buying in here. We kept getting breaks and fake outs, breaks and fake outs. I'm buying. SEC screwed it all up. This is what it did last time. Shot up to 190 from 5 cents. But hey, I bought it. I explained many times in these live sessions, it was a punt, it was a bet, it was a risk, but it was a calculated risk. It went up 450% in a month prior to Christmas. These are insane gains, and these are real-time markets, and I have banged on about this. I've shown you there 10 or 15 blog posts during the year. This is what I'm doing. This is how I do it. This is what I'm focusing on. This is why. So if you still don't get this and you don't understand this, you need to check those posts out, because this is potentially life-changing gains. Not financial advice, as ever. Only risk money you can afford to lose. Next one is MicroStrategy, shown you lots of times before. This was from a blog post, a live training session I held with you guys in October 2023. And here I was a buyer of MicroStrategy. They've had a share split on this. It was originally $330. It's now $335. But I bought that, and overall, this was the best performing stock for me. It actually went up 1,400%. Never understand with TradingView why it can wildly differ so much. I think it was 1,400%. And this was rare. I mean, it's very rare that anybody is this accurate. I mean, that was a perfect place to buy after years of consolidation. And that there, I sent out the telegram at 5:40 saying to folks, look, I'm taking a chunk of profit now because this has just got silly. And that was the thing I showed you a little bit early. This is Lucy. In 11 months, made 1,000% gain on that stock. Now do you understand why I get so passionate about this? Then, for the year ahead, I still hold the balance of MicroStrategy. I bought some more MicroStrategy the other day at 300, I think it was, 280 for my daughter. And again, I'd sent a message out for that. Coinbase, I sent a message out saying I would be a buyer at 250, and that is up 10% in the last 3 days, 20%. Again, it had the potential to make 25% for a stock. The thing is about this one is if Trump follows through with the crypto positivity, he's even talking about projects that are American, which is a bit of a misnomer in the crypto world. But anything that's American based, like Cardano, ADA, like XRP, XLM, and HBAR, he's talking about making it tax-free. Now, we have members and we have guests with us today from the Middle East, where I have friends and I have clients in Dubai. It's tax-free as crypto. I also have them in Saudi, where it's tax-free. And also, they are using crypto every day. I talked to one of my guys recently, and a mate of a mate had gone into the Ferrari dealer and paid 300 grand for a Ferrari on Bitcoin and drove it out the same day. But he was telling me they just use crypto all the time. If Trump does follow through with crypto to be tax-free, Coinbase is an American regulated and American-based crypto exchange. They are the conduit for BlackRock, and they are the custodian for BlackRock. Ergo, if more Americans start to buy crypto, who should benefit? Not financial advice. And then final one I'll leave you with on this subject. I spoke earlier about Riot, and I explained about Riot in January of last year. So this was when price was in here. why I wasn't going to stay in it after the halving. And the halving came along. So from the January here, it did go up 70%. After the halving, it started to drop. And by the time of the halving back here, it was back where it started, and it's back there now. So now the price of Bitcoin is going back up again. The miners can start to make a profit potentially. And I do have another one that I am very interested in at the moment. I'll share with you later. Then I talked about stocks before. So gold, I showed you, went up 35% last year. Silver went up 45%. Silver technically has the potential to do better than gold this year. Silver at the moment, I think, is at 25. Let's have a look. Where is it? 30. I've lost track. So it's at 30. In 2012, after the recovery after the financial crash, silver went to $49 an ounce. So technically, it still has the potential to make a massive gain. On top of which, silver is used. It's used in everything. It's used in computers, it's used in phones, it's used in solar panels. The world is trying to go green. They're buying lots and lots more solar panels. Therefore, the demand for silver is going higher. And it is the most manipulated commodity on the planet. JP Morgan, some of their traders were accused of racketeering in 2023 in manipulating these kind of markets. The theory goes that the hedge funds and the big funds have got themselves in a mess where they have contracts to short, and yet there is not the physical silver for delivery. So this has the potential, even from its current position, to go 14% to its recent high. It could go a long, long way, could silver. And this was in July. I said to folks, this would be an area on a pullback. And again, guys, this was the buy in May. Breakout, pullback. Breakout, take profit. Where did it stop last time? And now looking for pullbacks again. Back to EXK. So this is a silver mining stock. Silver up 45% last year. This one, since January last year, when I said to folks I'm buying, went up 267% at its peak. Why? Because if you are mining silver, which at the time silver was selling for $20 an ounce, hey, if it's selling for $30 an ounce and you've got all the cost of infrastructure and employment and licenses and trucks and everything else, you are making more profit for the same amount of work. But I did not stay in all the way through. I take profits and I look then to buy again on pullbacks. I took profit here because previous high. I then bought back on a pullback and it dropped further. I bought some more. It got up to highs. It started to struggle. So I take most of it off. And now I am waiting, looking, hoping to buy again. But not here. Either a break above here. I don't know if that's going to be enough for me. Yeah, 35%. So I need an alarm here. Or preferably, I would like it to come down somewhere down here. And I am doing the same thing at the minute with uranium. So the only uranium stock I still hold is this one, CCJ. Again, this is M2 breakout of a triangle, a 55 EMA in a bull market, in a market where the demand is exceeding the supply, ergo the price should go up. And that was from May 23, went up 150%. Once again, I have taken profit along the way. I bought on the dips. That was a perfect pullback. Bought here again. So last summer, when everybody got bored with it, it wasn't selling. Here, I was buying. So I cost averaged in at $40 in the summer, and it went up 50%. At the moment, there's not enough potential gain. I want it to come back further. Right. Normally at this stage, or earlier than this, Ashley would have come in. So A, I need a sip of my tea, and B, it's a good opportunity for you guys to ask me any questions you would like. So if you got any questions, anything you want me to look at, anything you want me to show you, now's a good opportunity. We've got 10 minutes left. Stick it in the chat box. Cameron says, would you buy property in 2020? Which country are you in, Cameron? I mean, suspect with the name that Scotland, but I could be well wrong. Which country? I personally am just selling my last two houses in the UK. I don't want anything else to do with the UK. The tax system there is horrendous. The Labour government are going to make it so difficult. If you get somebody in that doesn't pay, it's going to be a nightmare to get them out. Um, I was talking to a guy this morning, say he's a wealth advisor, and I was saying I bought property at the right time. I bought property in 2000, and money was cheap. It was easy to get 95% loans to value. I'd be very careful, but I don't know the Scottish market, Cameron. So it could be, niches, possibly Airbnb stuff. I don't know. I don't know it enough. But me personally, I don't want any investment in property in the UK anymore. Dan says, do you go into detail on your technical analysis of crypto and stocks inside of your investing future? Yes. Or do you mainly call your positions inside of Telegram? I call the positions in Telegram, but what I do is I do updates periodically as to what I'm buying and selling and where and why. So in there, this is the crypto buys and the top stocks. There is a course in here as well that explains what I'm buying and why and trading crypto. I do not use leverage with crypto. If you use leverage to trade with crypto, you will get burned. So I strongly recommend do not use leverage for crypto. But there's courses in here about stocks and there's courses about recession investing. If we do get a recession, the things that do well in a recession, that's another subject for another day. And then back in here, this is my crypto one. Janice helps me. Janice is a techie guy. It's very good, useful for me and him. I'm good at the technical analysis. He's very good at understanding the white papers. Whereas if you read a white paper of what a crypto project's trying to do, it's great for going to sleep for me. I just can't be doing with that. So here I go through periodically an update. It's not like Mentor Pro. It's not every day and every week. This is maybe once a month. And then I explain how I'm playing it. I explain about taking the profits from the metals and why I was focusing on crypto, which turned out to be a good decision. And again, it's this thing about all the time trying to catch the right cycle at the right time. And if you can catch the right cycle at the right time, that's how you can make a lot of money. And I said earlier, if you look at gold, I was buying gold in 2003 when the idiot in charge of the Bank of England, the finance in the bank, government, British government, Gordon Brown announced that they were selling the UK's gold deposits at 330, I think, at the time. And of course, what happened? The price of gold tanked. The clown. If you're ever going to sell anything, the last thing you do is tell everybody, don't you? But anyway, again, that's why these people are politicians and not business people. So this was after the financial crash. This was prior to the crash. Again, look at this thing. This is this whole thing. Nothing goes up straight. Goes up, pulls back, goes up, pull back. Doesn't look much now, but here, 2005, Brown has sold all the British gold for $330 an ounce, I think it was. And by 2006, it doubled. And then it doubled again. And then 2008, it crashed because of the financial crash. S&P came down nearly 60%. Gold came down 30%, touched the 200 EMA, bounced away. Gold recovered within a year, and gold went on a parabolic run. So that was then up 176% by 2012. It was back to where it was within a year. The S&P took 5 years to get back to where it was. So gold traditionally does really well when there's chaos and when the markets crash. So that's what that was. But then gold was a really poor asset class to hold because it just went sideways and down. And bear in mind, it's costing you for insurance and it's costing you for storage. So it was a poor one. 2018, there was a mini financial crash. So gold again went on a run. And gold even dropped when COVID came along, which everything dropped during COVID, which was nuts. But gold recovered very quickly. Then it came up and it rejected at 2,075 and it rejected there again and it rejected there again. So again, you look to buy on the dips and sell at the top, buy on the dips, sell at the top. Then you make the final move up here. MR says, what do you think about the stock Robinhood? I was looking at this the other day for somebody. I think I've got that on here. I think it's too expensive at the minute from memory. Let's have a look. Yeah. I have an alarm set down here, MR. Is that Matt? Oh no, it's Mark. It's Marcel. Sorry, Marcel. I don't like to buy things when they're overextended like this, so I want to buy on a pullback. We did have a bit of a gap here, and traditionally gaps tend to fill. I have an alarm set down here, so that would be 65% gain. So remember, I'm only going to buy a stock if I can make at least 25%. So if it was to get down here, anywhere down to 34, then yes, I would be interested. I do need to do a bit more research on it, but I have spoken to a few people about this one, and I have set up an alarm. So 34, I'd start to be interested. Zoe, any narratives you're looking at in particular in crypto? As I say, Zoe, I'll do. You're a member of the investing group. I will do an update by the weekend, by this weekend. It's the smaller stuff that we're going to be looking at. The big stuff will look after itself, but the smaller stuff is where we could make the most gains, I believe. Yeah, Dan says he's joined the community, going over everything and getting a bit overwhelmed. Just stick to M2. If you focus on M2, the M2 strategy is the simplest, as you know, and also the advantage of it is you can use it in different markets. So if Forex is slow this week, then like this one, if this is not going to get there this week, and a lot of them aren't because we need a bigger pullback, then you can go off and look at doing exactly the same thing in crypto and in stocks like I've been showing you today. So I recommend anybody that's just joined us, focus on M2. The other thing, many people are trying to do this around a day job. So this is ideal because this is set and forget. You place the order and you walk away. So you're not having to sit there or trying to. I spoke to somebody the other week. He's in New York and he's up at 3 in the morning trading the London Open. Ah, dear me, there's no need for that. Let's see. I think I've answered all the questions. Oh, Karim says, I'm not into crypto. I like to start. Interesting view and research. Thank you. You're welcome, Karim. Definitely worth looking at. Oh, Ashutosh says, take a look at the Aussie yen. I think you might have jinxed this now, Ashutosh. I think it was struggling this morning. Oh, no, I'm still in. Right. This is a trade I took yesterday. And what I've done with this one, I initially had the stop up here. So I think I was risking 50 pips. I was above the whole number. Can't remember now. I have moved the stop to half the risk, and I always do that anyway. I had to leave it a bit of breathing room last night because of the spreads widening. At the minute, this is more of an Aussie new move to me than the dollar yen. But the dollar yen also is still struggling here. It keeps trying and trying to break this area, and it's had another go today. It's already done 104 pips today, and the average is 143, so it might go a little bit. The better one yesterday was the euro pound. Again, it's struggling at the moment. Now, this is euro pound. So yesterday, I had the stop at 25 pips. I moved it last night. Bear in mind, this only moves 40 pips a day. So yesterday, by the point that it got up to there, it done 43 pips. So it done the day's range. Last night, so I had the stop here. Last night, I moved the stop in here. So I was risking 25. I'm now risking 8. So let's say on a simplistic level, I was risking $100. I'm now risking 30. So if it loses, it's a tiny amount. But it still has the potential to go perhaps 80 odd pips. So once you get into a trade, the goal is to protect it. And at the moment, with this one, I had a trend line. I had the 55 EMA. I had a fib level, I think. Did I fib there? Can't remember. It's in the Sunday post. Maybe I fibbed from there to there. So again, you've got the 5 reasons. You've got the whole number, which is where it's struggling at again and where it rejected for the last week or more. You've got the whole number. You've got previous support and resistance going on. Got the 55 EMA in a downtrend with the trend line. with a good potential risk reward ratio, risking 25 for a potential 85. So it ticks all the boxes. I'm willing to sit through this one. 2 new messages. I never short crypto, Dan. Never. Stocks occasionally, but to be honest, I'm focusing on learning options at the moment for stocks. I do occasionally hedge by using an ETF. So if I'm long in a mining stock and I still think it can go up, I will hedge it by shorting an ETF. But if you're new, I'd focus on the basics for now. The safest thing is to trade always with the trend. No, I didn't use the 4 hour on the Euro GBP, Zoe. I didn't look at it. I don't often go down to 4 hour, to be honest. Dan says, thanks, Mark. I work on a mining site in Australia, so when I'm not working, I have a lot of time. When I'm at work, I have limited attention with the charts. Think I'll stick to learning FX and crypto with the M2 strategy. Well, I put a post in the other day. It's actually on the outside of the website as well. So this is Ben, who's just done us a nice testimonial. Ben works at the bottom of the sea, so he's away for a month at a time. I mean, he came to me as a private student last year. He'd been losing for 10 years badly, and he'd just lost 9 out of 10 of his recent trades. Anyway, he made 293% on his stocks and crypto last year, and he's passed the funded account, and he's now onto a funded account. Fun guy, really interesting guy. One of the most dangerous jobs in the world. Gets paid well for doing it. But in here, he goes through and explains everything about his journey. So very similar to you, work on, work off. I have a relative actually works in mining in Perth, so I suspect that might be where you are, Dan. Righty-ho, thank you all, one and all, for attending. I will put the replay inside the members area later today and say Ashley's away this week, so I am running around like a bit of a blue arse flea. I will post this in the external blog later in the week as well when I get a chance. Thank you all for attending. If you were a guest today, I hope you enjoyed the session. And if you need any help or anything, let me know. Righty-ho, thanks one and all. Catch you all later. See you next time. Bye-bye.